So on this YouTube channel, I mostly talk about individual stocks and trading individual stocks, but a lot of my money is actually in ETFs, which stands for exchange traded funds. I do have my brokerage account, which is strictly just individual stocks that I'm trading, but I have my accounts like my Roth IRA, for instance, which is 100% ETFs. There's not a single individual stock in that entire account. And I like to compare the returns each year to see if I'm actually, on my own able to beat my ETF strategy. But in this video, I want to talk about the ETFs that I actually buy. The first one is VOO, which is an S&P 500 index fund. Probably the most popular ETF in the world. It, is made to track the S&P 500, which is the 500 largest U.S. companies. Most active investors underperform the S&P. Even most hedge funds underperform the S&P. And with even, Warren Buffett has said that, for the average person, they should just buy the S&P. And with all that being said, even though I do think that by trading individual stocks, I can beat the market, I also, just in case, want to own a lot of S&P. So with my Roth IRA, almost all of that money is in the S&P 500. Now, before I say the second ETF that I buy and is in my account, I want to quickly mention that I'm not saying this is the best strategy out there, the best way to buy ETFs. I simply don't know. If somebody does know, and in the comments, I'm definitely open for feedback. But the second ETF that I have a lot of my money in is one by Charles Schwab called SCHD. Now, this is a dividend ETF. That's the primary function of this ETF is to get dividends, which with that in mind, I reinvest every single dividend into buying more shares of this ETF. And I do that because historically, which obviously past performance is not necessarily indicative of future performance, but with past performance in mind, it has returned pretty well, especially when you account for dividend reinvestment. And since, I always reinvest the dividends, I think this is an ETF that's going to do very well for me long term. The third ETF that I invest a lot of my money in is called VUG. It's an ETF that's centered around growth, also managed by Vanguard. Now again, I want to mention that just because something has historically performed very well doesn't mean that it'll continue to perform very well. But when you do look at, past performance, it's done a very good job of actually, returning money to shareholders. It's returned very well, and it's returned very well for me so far. So I'm a very big fan of this ETF. And for the fourth ETF that I have a lot of money of my own money invested in, this one might be a little controversial, but it's called IBIT, which is BlackRock's Bitcoin ETF. Again, not saying this is the best strategy, but I have been buying Bitcoin every single week for years now, and I'm a very big fan of Bitcoin. It's obviously performed insanely well for me. So when the ETFs got announced, I did want to include the Bitcoin in my Roth IRA. So in my Roth, I started buying Bitcoin. So far, that has obviously been a very good decision. Will it continue to be a good decision? I don't know. But I will say that I'm going to continue, investing in it every single week because I do want Bitcoin in my retirement. So those are the four ETFs that, are in my Roth IRA. It's the four and only four that I buy in it. And that's my strategy. I don't necessarily know if it's the best strategy. There's someone out there knows more than I do and would like to comment. I'm definitely open for feedback. But that's how I have my Roth IRA set up. Thank you for watching.